Some say the crypto era might be over. The meteoric ascent of cryptocurrency and its spectacular crash back down to Earth in 2 years might go down as one of the strangest, most thrilling, and heartbreaking sagas of the internet age. And 2022 was both the peak and the valley. After witnessing multiple wins and breakthroughs in 2021, the crypto enthusiasts had overflowing confidence and optimism for the year ahead. However, 2022 was without any doubt a chaotic and challenging year for the crypto industry, welcomed with the dawn of the crypto winter, failed algorithmic stablecoins, and the domino effect, resulting in a series of implosions and bankruptcies in the industry. The mighty rise and fall of the cryptocurrency markets have stunned its community of investors and boosters, who just a year ago were ruling the market. Finance experts are comparing the collapse to other major busted bubbles from the past. These events have led investors to wonder about the future of cryptocurrencies and about whether you should be using and investing in them. We'll discuss the crypto cycle and whether the cryptocurrency will follow its 4-year schedule for the upcoming year. In the last year, the crypto euphoria started to give way. Cryptocurrency rates have fallen by more than half. Trading volume has cratered, and several high-profile corporations have collapsed in liquidity crises. Rising interest rates, inflation, and concerns about a potential recession made investors risk-averse. Plus, the arrest of Sam Bankman-Fried, the former CEO of what was one of the largest and most respected cryptocurrency exchanges in the world, has only intensified the logic that the crypto bubble has definitively popped, taking with it billions of dollars of investments made by regular people, pension funds, venture capitalists, and traditional companies. Now, crypto may have crashed before, but this time it fell from a greater height. It's unclear whether it can recover from its downfall. What does the crypto market cycle look like? Market cycles are patterns that arise from the psychology of market contributors and the greater economic environment. This is a natural phenomena that occurs in every market, and the crypto market is no exception. Crypto market cycles start with little to no interest in the market. However, as more interest and demand arise, asset prices generally rise to keep up with the increasing demand. At some point, prices reach a peak and eventually start to drop as interest declines and supply outweighs the demand. At the end of each 4-year cycle, a new cycle begins. Now, although it's difficult to pinpoint the start or the end of a market cycle, most cryptocurrencies go through similar stages. Considering the characteristics of each stage and how a typical user may approach each of these stages can help them participate in the market in a more informed way. At the beginning of the year 2022, money flowed like bubbly, starting with a rush of record-high $70,000 Bitcoin prices the previous November. NFT collections pumped left and right. Actors Matt Damon and Larry David popped up in Super Bowl commercials, trumpeting crypto for the brave and bold, comparing it to literal spaceflight. The erstwhile $32 billion crypto exchange FTX partied with erstwhile power couple Tom Brady and Gisele Bündchen in the Bahamas. On Twitter, NBA stars like Steph Curry and rappers like Snoop Dogg changed into bored apes from the $4 billion Web3 company Yuga Labs. Then, in what seemed like the blink of an eye, springtime became a cold crypto winter. In May, the Terra Luna stablecoin system collapsed, dispersing $60 billion. And dropping the market into something that would become a deep freeze. Then, Celsius fell. Next, the Three Arrows Capital. But perhaps the most earth-shattering event in November, 1 year after Bitcoin's big hurrah, FTX, one of the brightest stars in the crypto industry, was sucked into a black hole of its own making. Its collapse hit like a supernova, and the hundreds of industry performers in its orbit got dragged into the chaos. Analysts say that usually the crypto winners begin whenever there's a sheer sell-off from an all-time high in the price of Bitcoin. Well, Bitcoin hit a 52-week high of $68,990 in November of 2021 before entering a prolonged downward plunge. Over the last 10 months, Bitcoin experienced heavy losses, dipping nearly 65% from November of 2021 to early September of 2022. Now, the original crypto has been hovering around $20,000, slightly higher than Bitcoin's 52-week low of $17,708 on June 18th. Ethereum, the second largest cryptocurrency, also dropped by 67% since its November peak as of this writing. Now, of course, many crypto investors wonder if Ethereum might help the second largest cryptocurrency recover. But as of right now, the verdict is still out on the results of that upgrade. This is when Ethereum will convert from a proof-of-work protocol to a proof-of-stake protocol. However, experts say expectations for more Federal Reserve monetary policy are worsening the current downturn, and that institutional investors are driving sales. Any investors who purchased Bitcoin in the last year will have experienced a loss, as the original crypto has slid downward. Before the last crypto winter, Bitcoin had reached a high of nearly $19,500 in 2017, before falling to less than $3,300 in 2018, representing a loss of at least 83%. This is where 2022 ended, and it was a doozy. If you don't know the whole story of the 2022 crypto downfall, don't worry. Many Hollywood movies are already being made on the topic. But with the new year around the corner, new possibilities await. As lifeless as crypto may seem now, like the dark, cold expanse of deep space, many in the industry remain hopeful that the vast potential of crypto technology itself can evolve, and that this moment could be the dawn of a new era. Truth behind the crypto cycle. The last famous recent lows of the cycles were the years 2000, 2008, and 2020. These downfalls are known as the dot-com bubble pop, the subprime real estate crash, and the COVID-19 financial crisis. Now, unlike the first two, following the COVID crash in 2020, it took just a few weeks for Wall Street to get back onto a bullish track. NASDAQ charted a new all-time high several months after an almost 30% plus corona crash. As can be seen, the saying, "markets take the stairs up and the elevator down," is true for any type of financial market. And it's also true especially for cryptocurrencies. The major differentiating factor with crypto, however, is instability. Now, while a sharp daily movement of NASDAQ is considered to be 1 to 2%, Bitcoin, which is considered the steadiest cryptocurrency and the base asset, can fluctuate more than 20% a day. In 2023, we can expect to see a better modification of global regulations and agreements on crypto. From the events of 2022, regulation within the industry is certainly predictable, with greater mainstream adoption, a rise in demand for Web3 talent, and smart regulation being essential for cryptocurrency. What can we expect for 2023? The first thing we can begin to look at is how previous crypto winners have played out. According to digital asset fund manager Grayscale Investments, the current crypto winter officially began on June 13th, 2022. Now, this might come as a surprise, given that Bitcoin had already fallen over 60% at that point. Grayscale made this distinction to take into account the rapid rise in prices before the fall by analyzing the blockchain to find the point where most crypto investors hold losses from their purchase price. The past major crypto cycles in 2012 and 2019 lasted an average of 4 years from peak to trough. Given that the current crypto winter only began over the past few months, this could mean that we're in for a long winter. But in both cases, the crypto winter ended with a catalyst that increased the interest and adoption of Bitcoin and other currencies. Bitcoin bull runs historically coincide with the 4-year market cycle, which includes accumulation, buying, an uptrend, distribution, selling, and a downtrend. We would generally expect the accumulation part of this process to begin in 2023, though many believe it could be delayed until 2024. Nonetheless, we will likely see valuations rise in mid-2023. The failures seen in 2022 did not occur from gaps in blockchain technology, and were instead the results of mistaken verdicts and poor decision-making. As regulatory frameworks become more transparent and institutional adoption of crypto becomes more extensive, mainstream adoption of blockchain will begin to gain momentum. And this happens for a simple reason. The establishment of clear regulations in the industry has a positive correlation with building investor confidence and certainty when it comes to asset allocation. When it comes to predicting the future of the crypto market, most experts say the stronger cryptos shall prevail. One must understand the risks involved with investing in highly volatile, high-risk assets like crypto, and understand you could lose money that you invest. Now, right now, we're in a market environment where everything is down: real estate, the stock market, and cryptocurrency. We can't say crypto is dead unless it fails to come back when everything else recovers. It's easy to say this is the end when everything's down. For the past 13 years, cryptocurrency has followed its 4-year cycles and come back from its lows, going on to reach all new heights every time. This could be the time that Bitcoin doesn't recover, but as of right now, it's too early to call. What do you think of crypto winter? And when will this cold cycle finally end? Let me know in the comments section. With this, we wind up our discussion on the dark and twisted story of the cryptocurrency's 4-year cycle. Let's just hope for an imminent recovery. All we can say for now is steer safely in the investment world.